What's going on, traders? Sandra O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is February 24th, 2022. What a day, what a day. Let's talk about it. Before we dive into this market recap video, quick first disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. So yesterday's video was titled Opportunity Knocks. And one of the core themes of yesterday's video, if you're watching, was, hey, the market, everything seems like it's all gone. The market, if you're purely looking at this from a technical perspective, looks like the market just broke down. But I laid out some of the reasons why there were some big opportunities ahead of us and why yesterday was not the day to quit. It's really the day to get excited. And posted that video shortly thereafter. I'm hanging out, I'm watching The Bachelor with my girlfriend, life is good, and I get the news that Russia was indeed invading Ukraine. So heading into today's session, anything could have happened, and I saw like a huge overnight gap down, that we were down like over 2% in all the headline indices. Like, oh my gosh, this is like worst case scenario unfolding. And look at how the day ended. We ended up having a really nice day in the indices. We had the S&P 500 as measured by the SPY finishing at 1.5%. We had the NASDAQ QQQ finishing down 3.36%. IWM small caps up 2.62%. Dow Jones barely up, only by 1/4%. And the ARK Innovation ETF, which we covered extensively in yesterday's video, up 7.79%, our big winner. So honestly, if you told me, hey, Russia was going to invade Ukraine, what do you think the market's going to do? This is like, I could not have envisioned a better scenario where this would actually be the thing that causes everyone to cover their hedges and actually take some shots on the long side. Every index closed within the upper, very close to the top end of its range. You can see like everything is in the 90s in terms of the percent daily range. Volatility was down in all of these indices, which is great, and the breadth ended up finishing out positive for the most part in everything except the Dow Jones. So all is well that ends well. Finviz heat map, a lot of these tech stocks which got brutalized over the past 3 or 4 days had very nice balances today. Nvidia was up 6%, Tesla finished up 4.81%, Google, Amazon, Microsoft, Apple, you name it. The areas of the market that did the worst, which is a really good thing, are the areas that everyone has been hiding out in for the past few weeks to few months. The energy stocks got crushed. Defensives and consumer staples got crushed. Gold got crushed. And a lot of these assets that investors have been flocking out of for the past, quite literally a year, started to catch really nice bounces. Sectors, gold miners were down 1.93%. European financials were down big. But other than that, check this out. We had some very nice balances. Innovative tech was up 6.3%. The ARK funds were all up big. We had the blockchain assets up 3.27%. Biotech was up 4.5%. So yeah, everything got really nice bounces. Wow, and look at this. Solar energy was up 8.62%. That's definitely an area to keep a watchful eye on. And kind of interesting that this is happening amidst a lot of the geopolitical conflict that potentially impacts energy. And basically this is clean energy. You can refer to the other as like dirty energy or fossil fuels. A lot of those are in flux. The United States could have sanctioned Russian oil exports, but they did not do that. And I think it has a large part related to our inflation problem that we're experiencing, and the fact that if crude spikes up to like $120 a barrel, that would be really bad for our financial system as well. Style factors, we had the high beta style factor up 3.6%, our big winner. That is a huge bounce. And we had momentum and growth also up 2.83% and 3.23% respectively. Seasonality, check out where we are. So the end of February is very rough seasonally. And you can see some of the worst seasonality of the year. And then the market has its seasonal bottom into the beginning of March. In the beginning of March, it's not like you rip to the upside. It's very, very choppy. Then the seasonality improves drastically as we get into the end of March and April. I am going to be out of the office beginning tomorrow for a week. I'm actually going on vacation. I'm going to Italy. And what a great time to be going to Europe, right? Yeah, this is pretty crazy, but hopefully we're far away from the madness. I take this week off because I know that this seasonality is just absolutely horrible. I think next year I'll probably take my vacation closer to like smack dab in the middle of February. But nonetheless, yeah, I'll be off the desk. I will not be putting out these recap videos. And I will be back on March, I believe it's March 3rd. So as I get back, the seasonality should be starting to improve. All right, let's talk about these markets. Let's just walk through the headline indices. Let's take a look here. We're going to go to the S&P 500 and let's pull this up. And I'm sure the question's going to be asked like a million times, like, how is it that the market was up and we just had that invasion news? And the reason being is the VIX has been so stubbornly bid. And we had this sell-off for 4 days into the event. So players were already putting on hedges. Players were already selling their holdings. And this event ended up being sort of like sell the rumor, buy the news. And what's very interesting, I drew these red lines. Yesterday, these were sort of like the line in the sand levels. Now, hey, if we break down below these, that's where the market could really waterfall. And we broke below those levels, but we ended up closing above them. So I think we could end up getting some follow through to this rally and get a more meaningful balance, potentially up to this 4309 spot 75 level, or even beyond, up to the March upcoming monthly value area low. Let's take a look at our hourly chart real quick. And you can see our weekly value area low is up here at 4387 spot 5. Could we end up getting there? Absolutely. And for tomorrow's session, I think the happy path really has been gapping down and then just strengthening throughout the session. A lot of times when we get the big gaps higher, that's the open invitation for institutions to just come in and sell the market down. So yeah, that is our weekly value area. Let's take a quick look at the NASDAQ. The NASDAQ was getting absolutely punished. Oh yeah, and look at this. This is our weekly chart. So we opened up below the yearly points of control. And I was like, oh man, this means the majority of buyers that purchased stocks in 2021, now they're underwater. It was a really good thing that we were able to close above that yearly point of control at 4186 spot 25. All right, let's take a look at the NASDAQ. NASDAQ was up 2.99%. We are not yet above this yearly points of control for the NASDAQ. That is noteworthy, but nonetheless, we got a very powerful bounce today. Russell 2000, same deal, very nice bounce. We retraced a lot of the negativity from yesterday, and look at the volume on this bounce. Very strong volume. Could we make a run at this monthly point of control? Absolutely. And then the Dow Jones. Dow Jones still out here in no man's land. We put in this doji candle, but I think the Dow Jones is being used to try to escape a lot of the market weakness. And these names typically have lower valuations and just much lower growth rates. So yeah, I'm not really interested in the Dow Jones. And the Dow Jones is below the yearly value area as well. All right, let's take a look here. So in the morning, we started getting a nice bounce, and I noticed the ARK Innovation ETF turned green pretty quickly throughout the session. So I posted this for Pristine Capital members, and I try not to just inundate our market analysis chat with just like a running commentary of like every single move in the market. I try to really just chime in when I think there's something that is really noteworthy. So I put this at 10:13 a.m. Bitcoin's bouncing, ARK is bouncing. It makes sense that the assets that have been getting crushed since mid-2021 would bottom out / bounce first. If you're playing for a balance, these are the best areas to be in my opinion. And I ended up adding to my upstart. Take a look at this. So I added to my upstart. I had the March 18th 120 strike calls, and I originally picked up some of those for 1925. I added to my position for 1120. And I was like, okay, I think this is a good opportunity for Upstart. Let's see what happens. And Upstart ended up just mooning today. Look at this. So first of all, this is the weekly chart. And we're above the yearly point of control, which is great. Take a look at this. So this stock finished up positive 17.01%. I talked about this one on Twitter Spaces as well. And Upstart reported just fantastic earnings. They beat on earnings and sales. They've raised their guidance on earnings and sales. And they announced a $400 million buyback. And the market cap of this name is, I think, like 10 or 12 billion. So definitely meaningful. When these growth stocks got crushed, though, over the past couple days, Upstart got taken down with them. So I knew that Upstart, if and when these growth stocks bounce, which they're going to do, it's not like they're just going to stay down ad infinitum. The other thing that gave me a little bit more conviction was seeing the ARK ETF had lost all of its post-pandemic gains. So that was the other thing. Hey, I want to get involved in a growth stock and I want it to be a leader. So Upstart really fit the bill and the market really just went after this name today. The other name that I noticed was really sought after. I didn't trade this one, but I post this one for our members as well. This one, CrowdStrike was up 13%. And I noticed there was a theme. A lot of these cybersecurity stocks did very well today, like the Sentinel-1. Same deal, up 14.78%. There's been a lot of talk of potential cyber warfare, etc. And this group was really catching a bid and showing some nice relative strength. So yeah, I added to my Upstart. And this position is marking at a winner now. And then I also added to my GT or GBTC position. And this one, same deal. Bitcoin is one of those assets that really got taken to the woodshed over the past year. I think this one has a really bright future. And this GBTC ETF, if it converts to, or not ETF, it's a trust. If it gets converted to an ETF, which there is a plan to do that, then this one could gain an additional 20% as the discount from the NAV narrows down pretty close to zero. So yeah, added those. I'm not trying to go too crazy. My trend model is still at a -1, but I do think today was a good opportunity to really just like keep nibbling at stocks and things that are super beaten down. Let's take a look. I want to really quick point out on our after hours movers. Take a look at this Square. Oh my gosh. Square is up bigly. This thing's up 26.9%. Farfetch is up 33.31%. And Etsy, so here's the real kicker. Etsy beat on their sales and earnings ever so slightly, not like a crazy beat. And they actually lowered their guidance for next quarter. Lowered it, not raised it, not maintained it. They lowered their guidance. And the stock is up 25%. So what that tells me is there might be a bit of a character shift in how market participants are perceiving these growth stocks. Because in this hard money environment, what we've been seeing is even if these growth stocks are killing their earnings, like crushing it in a good way, they're still getting killed. Etsy basically just like whiffed their earnings report and they are up in the after hours really big. So I think these growth stocks, if we start to see, we continue to see a nice balance, keep looking at these. Because ARK, remember, we showed this yesterday. Up until this ripper that we had today, this thing had lost all of its post-pandemic gains. So when this happens, you'll see a loud chorus of people saying, it's in a bubble, it's in a bubble. And the bubble has already popped within this group. So yeah, definitely worth it to just watch some of those names that are really beaten down, that are reporting really good earnings. That's the key. You don't want to go for the ones like Skills, or this was a SPAC IPO'd at $10. And who knows, maybe this thing just has like a huge violent bounce just because it's down so much. Well, my point is, don't go for the laggards, go for the stocks that are really high quality. Like Datadog, for instance, this was up 6.97%. Datadog, if you look at this weekly chart, the stock is not broken by any means. Still looks really good. If these growth stocks start moving to the upside, this one is definitely another strong candidate to lead, and it's not far off from the prior all-time highs. Let's take a quick look before we break, because I don't want this video to be like a 30-minute video. I think this is just as noteworthy as the fact that the growth stocks bounced. Look at what gold did today. Gold had a really big shock move higher, and then it lost pretty much all of the gains. So now it's down to 177.14. Look at the high volume on this. If you look, the beginning of this run higher in gold was catalyzed by a big green bar on high volume. Now what we got was a huge red bar on even bigger volume. I really think that gold, this was the run here. And I definitely think, from a trend following perspective, you never want to see these big red bars. Same thing, energy stocks. Energy stocks have been in a really strong trend. And I think there's a lot of smart money out there that's really been anticipating some geopolitical strife or this oil shortage, whatever. That smart money did a great job. And if you're successfully following this trend, you made a good chunk of change. This has been a great trend. But we're seeing the same dynamic here. We're getting these red candles, and look at the volume that's coming in. So I've seen this movie before where if you're in the energy stocks, you go, yeah, but it's holding above the monthly value, or look, like buyers came in and bought it off the lows. Like, this is still great. But usually these are the first telltale signs when you start getting these big red candles. And what I've seen in my day is like, this is the first sign, and then eventually, like, this is sort of like the distribution phase up here, and then you can end up seeing the trend break. Of course, if we have more geopolitical events, who really knows? But basically the haven assets that have been outperforming as the risk on assets have been languishing, today we got a bit of a role reversal. Last one I'll go through before we break is XLP, the Consumer Staples ETF. This one doesn't actually look quite as bad, but this is why I think for a lot of traders, when consumer staples are leading, like the financials and stuff like that, a lot of people say like it's not even worth trading. And I think I'll probably adopt that posture as well in the near future. Because with these consumer staples names, unless you really catch the trend immediately, like on the breakout you're in, or even on like a lower pivot, you somehow catch it. If you're one of these people where, say, like you notice the trend up here and you're like, man, let me try to find like a good trade location to get in, whatever. These consumer staples stocks, they're not big movers because these names are not growing their earnings and sales. And a lot of times by the time you catch on to the trend, unless you hit it perfectly, the risk reward just really is not that good. It's almost like you're picking up pennies in front of a steamroller. And we saw these staples names really roll over. Of course, it did put in a hammer candle, so that's, not bad. But yeah, I think, you're better off just focusing on other areas of the market. 'Cause these staples names, these aren't really the ones that are gonna, really get you paid and really move the needle on your account. Let's take a quick look. Wow, the dark index is out. Let's see what we got. So we had an elevated dark index print yesterday, and the dark index came out at 44.8. So the key level for the dark index is really a print above 45. That's when you know you had some big time accumulation. This is 44.8, so we're sort of on the cusp. This is, overall, I'll see this in a glass half full kind of way, because the 5-day moving average of the dark index is still pretty elevated. Let's see if we've moved out of a negative dealer gamma environment. Yeah, now we're at slightly positive dealer gamma, which is good. So we'll have to see. Maybe we get some follow through tomorrow in the market. That's my baseline expectation. But again, this is a very headline driven market. We see the VIX is still incredibly elevated. We're at a 30 VIX. So yeah, we have to take this day by day. And I am going to be heading out on my trip tomorrow. So I'll be very limited availability. I'll definitely check in here and then. And if there's something that I feel really compelled to trade, maybe I'll go ahead and do that. Yeah, starting tomorrow, I'm going to be on vacation. So I'll see you all in a week. Hope you all do very well in your trading. And yeah, stick to your game plan, stick to your guns. If you don't really see anything going on, remember the seasonality in the beginning of March, it's very choppy. So yeah, don't rush anything. Yeah, thank you so much for everyone that's been supporting the channel, watching these videos. Thank you to all the Pristine Capital members. You guys are awesome. And I will see you all in a week.